How's it going, everyone? It's Sam. China just made some demands. They demand some things from the US. We'll go through that. We'll actually react to the clip of CNBC talking about it. We'll also react to Tom Lee saying that good stock opportunities are emerging despite this market. We'll be going through that. Also, I'll give you an update on what's happening in the market. NVIDIA just made a massive announcement that is actually big for US jobs. And we'll also be looking at a couple companies purchasing Bitcoin here today. If you don't mind, hit subscribe so you can see future videos just like this. Also, if you want to trade crypto, there are links underneath the video to Blowfin, to WEEX, to BTCC, to CoinW, and to BitUniX. You can check out those different links underneath the video to get some pretty sweet bonus rewards, like 20% deposit bonuses. So check those out underneath the video. And as you can see here, the market's looking fairly good. The Nasdaq's up about 1.5%. Of course, it is volatile, so who knows by the time you see this where the market's at. But we have the 10-year coming down slightly. Seems like even though there's some uncertainty over the administration and what they're willing to do in the future, because Trump kind of walked back the exemptions and said they're just temporary, it seems like even though that's happening, the market's still fairly positive today. NVIDIA made some big news. They said that they'll manufacture American-made AI supercomputers in the U.S. for the first time now. They also announced $500 billion investment to build and expand AI infrastructure in the U.S. So it sounds like they're actually going to be making chips in the U.S. And I saw that there's going to be a couple different locations. One's in Houston, and then one's in Dallas that they're going to be building. So, I mean, those are going to be some huge factories in my opinion. And to be clear, they're such a profitable company and growing so quickly, they can dump a ton of money into this. Like they have $43 billion of cash and only $8 billion of debt. So they have $35 billion sitting around. And just last quarter, just the first quarter or the last quarter of last year, they made $15.6 billion in free cash flow. So yeah, they can put a lot of money into building this out, and then they don't have to worry about U.S. Tariffs or anything like that. And they probably need to build out more infrastructure anyways. So yeah, that's pretty awesome for U.S. jobs. MSTR acquired 3,459 Bitcoin for about $286 million at about 82.6 thousand. They achieved a Bitcoin yield of 11.4% year to date in 2025. Now they hold 531,644 Bitcoin acquired for just under 36 billion or 67.5 thousand per Bitcoin. So a lot of people give Michael Saylor a hard time saying they always buys at the worst possible times. Well, he bought about $2,000 ago. We are up to 84.7. And over the long term, it doesn't really matter if he buys at 82, 84, 89, 98, 102. It doesn't matter, right? They buy whenever they have the ability to buy. So if you think Saylor's like worried when the market's falling down and that's why he's not buying, that's not the case. It's just that there's not quite as much investor demand, and he's not going to try to raise capital and hold it for a month and then go deploy it. No, he's going to buy Bitcoin as soon as he can. 11.4% year to date too. That's impressive. We have MetaPlanet buying an additional 319 Bitcoin. So not a huge amount, but they are one of the largest holders on the other side of the world for Bitcoin. So they're going to continue to add more over time. President Trump is going to meet with pro-Bitcoin President Nayib Bukele in the White House today. I guarantee you they'll be talking about Bitcoin, right? Like, why else would El Salvador's president be in the White House? Okay, so they're going to be discussing Bitcoin and the strategic reserve, how the U.S. can move forward. There were a lot of articles last week talking about how the U.S. may sell some gold to buy Bitcoin, and we actually covered that on the channel. It's like it resurfaced last week and then got passed around a lot as if it was new, but that was still it was a clip that we had watched maybe 2 or 3 weeks ago saying that was possible. It was kind of before all the tariff news came out. The Bitcoin death cross marked the bottom, third year in a row. Tom Crown pointing this out. Yeah, look at this. So the death cross is when the 50-day goes underneath the 200-day. And as you can see, it was within 1 day of the exact bottom. We fell down to 74,300 the next day, but we crossed on the 6th the day before. If we scroll back, you can see death cross happened back in August. And it was a few days after the bottom, to be clear then. We went down to 49.5, and then we spiked actually the day of or the day before the death cross, you can see. But still, that was pretty good timing as well, almost marking the exact bottom. And then you can see back here, back in 2023, the death cross nailed the bottom again, actually to the day. And to be clear, it makes sense, right? Like the fact that we see a big drop also pulls down the 50-day a little bit faster than the 200-day. So it would make sense that it accelerates in when the crash happens. But that's something to pay attention to. Like when we are getting close to a death cross, pay attention because we're probably within a few days of the Pico bottom. So I'll continue to watch this as well. Oh, by the way, if you hear the word death cross, like people get very worried. It's not necessarily a time to be worried, right? That indicates that the market's already fallen down a lot because the 50-day is coming down much faster than the 200-day is going up. So like the fact that we're hitting this death cross isn't negative. It's actually a good thing in my opinion because it shows that there has been a lot of weakness, but most likely it's going to turn around. Now, of course, if we go into a bear market, we can do the death cross and then continue moving down for a while. So just be careful there. Bank of America says short the S&P 500 as global investors shift to safety. I saw someone tweet this like with a screenshot, and I thought I need to find the actual article because this sounds insane. Bank of America is advising investors to bet against the S&P 500, saying conditions remain unfavorable for equities until two key shifts occur: a meaningful rate cut by the Federal Reserve and a pause in the ongoing U.S.-China trade dispute. Michael Harnett, the bank's chief investment strategist, says the U.S. is no longer the global economy's primary growth engine. He referred to this as the end of U.S. exceptionalism and the beginning of a period where global capital starts to pull away from American markets. That seems a little bit extremist. That could always happen. We still have the global reserve currency. So I don't think that the U.S. is going to lose its dominance until it loses that. And even then, I would not be betting against the S&P 500. Like, I would not be shorting the S&P 500. I think that's really dumb in saying that you should short until, tariffs or a rate cut, and then we'll get back in. Well, the worst is probably over. The market's probably already priced that in because a lot of people hear rumors or start to bet, and then people get wise to what's happening or what's going to happen. So I think that would be extremely risky to bet against something that goes up about 10% a year really regularly and then try to time the market like that. That just seems insane to me. This is the other tweet from earlier. That NVIDIA is going to make plants in Houston and in Dallas as well. Now let's react to the demands by China to the U.S.
When it comes to tariffs, let's get to Eunice Yoon in Beijing. A lot going on, Eunice, regarding rare earths, visit to Vietnam, and more. Good morning.
Yeah, there's a lot going on here. You guys were talking about those tariff exemptions. The Chinese government, on the whole, over the weekend, had acknowledged that the tariff exemptions were what they described as a small step, and even said that China was evaluating the impact. The state media, though, had said that this was a U.S. retreat and also more evidence that the Chinese supply chain is really, really important for the world. Today, though, probably because of a lot of the confusion out of the messaging from the White House, the Chinese government doubled down on their overall stance. That is that the U.S. government should abolish the tariffs and the what they describe as wrongful actions around those tariffs. What was also interesting is that a state TV-linked social media account, which is now closely watched for messaging on U.S.-China trade, just several hours ago elaborated a little bit further, saying that to the Trump team, their, what they call delusion, is China will compromise under high tariffs. The account goes on saying, if the U.S. really wants to talk, China needs to see real action. What was also interesting is that the same blogger account was hinting at who would be taken, what kind of step would be taken next. And the target, they said, was American IP and American brands. And then this blogger went on to suggest that Chinese people could reject them. And they said that they noted that Walt Disney and Comcast, which owns CNBC, have development and production businesses, theme parks, and consumer goods in China. They also mentioned Sony, Paramount Global, as well as Netflix. The messaging, though, overall...
Now, I could be wrong here, but I don't even think Netflix operates in China. I'm almost certain that they don't, but they get pirated there. So kind of interesting. Yeah, it's interesting what they're saying here.
Outside of that, the potential for countermeasures is that there needs to be a lot of support for Chinese exporters, and that this is paramount. Carl, you mentioned President Xi's visit to Vietnam. He is there in Southeast Asia on a three-nation tour, ostensibly to try to build up those trade ties. Today, he announced, or China and Vietnam announced that they had signed several trade negotiation deals. And then, of course, there is the private sector that is also getting involved to try to help redirect some of the goods that the exporters used to sell, and I guess so still do sell to the United States as well as elsewhere, but also to sell them here in China.
Well, I've got to tell you, Eunice, I listened to you all morning, and you've been incredibly spot on all these things. But when I listen to the rhetoric from China, this is 1968, 72 rhetoric. It's the kind of rhetoric that just says there's never going to be a meeting. Is there a way to have a Nixon to China moment? Because as far as I'm concerned, this is just right now. You're on the verge of when I was a little boy. We kept thinking, when are they going to bomb us? I mean, that was the same rhetoric. Well, when are they going to launch their nuclear weapons? I mean, that's why we used to live in fear. That's why we had cubby holes. That's why we used to put our heads in a cubby hole, because the Chinese were going to bomb us if the Russians didn't bomb us. This is the same sound.
Well, I mean, I think that the Chinese have shown that they are willing to negotiate, that they do eventually want to have some sort of meeting. But it's just that the rhetoric, I mean, you mentioned rhetoric coming out of China. The rhetoric from the Chinese perspective of the White House is not actually that helpful, because the way things are being set up is that President Trump is the kingmaker, and that all these countries around the world are going over there and groveling and asking for deals. From the Chinese perspective, this cannot happen because for President Xi Jinping, it is so politically dangerous for him to be seen as crawling over to the United States asking for a deal.
Eunice, thank you. Eunice Yoon, we'll talk again shortly, I'm quite sure.
Yeah, I don't think either of them are going to be happy if they have to look weak. So I'm guessing it's going to go on a little bit longer, and then there'll be something that they can both claim is mutually beneficial. But who knows? There's been just escalation up to this point. And I confirmed Netflix is not available over in China. It says that you could use a VPN, but also Netflix does not allow VPNs either. So yeah, I don't think Netflix is going to be affected really at all from these tariffs. Let's go on to Tom Lee.
Futures are adding to Friday's somewhat surprising gains. For more on the markets, let's bring in Tom Lee, head of research at Fundstrat and chief investment officer of Fundstrat Capital, as well as a CNBC contributor. Last time you were on, Tom, you said, I think we can, and it was definitely one of your, what seemed like outrageous calls at the time. You said we'd be at 5,500 on the S&P. We should be able to get back there fairly easy. I think we were below 5,000 at the point. We did get close. We got another pullback, but after Friday, we're almost at 5,400 again. What was your reasons for thinking that? I think you just thought that maybe if you see a cat and you keep clapping, it'll jump the first time, but after a while, it finally just ignores you. Is that going to happen with the markets and all this tariff backdrop?
Yes. I mean, I think I know what you're saying, which is I do think markets are getting a little desensitized.
That's what I mean, yeah.
Yeah. And I think part of it is if someone had an investor hat on, a tactical hat, you know, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there, and the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations all of this is still unequivocally positive for stocks.
Interesting. So when we were below 5,000 and you were on the S&P and you were at 7,100, that's like 40%. So you're now, and were you high, one of the high people on the street at 7,100? Were you there?
Well, our year end originally was 6,600, but we thought we could touch 7,000 mid-year. I think the 6,600 is still possible, but I do think the 7,100 mid-year is obviously it'd be very difficult to reach.
So
but it's possible.
6,600 by year end. What about?
So 6,600 would be 20% up from here, something like that.
You've made a lot of good calls based on moderating inflation. What did you make those numbers at the end of the week?
Well, I think that if we didn't have to consider tariffs, inflation is definitely tracking below expectations.
I mean, where the Fed wants it, almost.
Yeah. I mean, core inflation month over month at 0.00056. I mean, that's like literally hitting a wall.
Now, is that for good reasons or for bad reasons?
I think it's for the right reasons because,
Oil?
Yeah, well, there's oil and foods off the boil, but it really is shelter is actually cooling to a 2% rate, and that is what you need to get inflation back down to 2.
Do you, at this point, foresee the worst case scenario in terms of dollar declines, 10-year yields due to people the Journal had an interesting piece today that it doesn't need to be that people just abandon the dollar and abandon the United States to invest in. It's just on the margin because it's a given that you cannot ignore the United States as the elephant in the room globally for all these things, for the, the currency, investments. But on the margin, it could make a big difference if there was even a slight lessening of what we were used to.
Yeah, I agree. I think that is the narrative at the moment that, U.S. exceptionalism's over and people are selling treasuries and dollars to buy other
This is exactly what that bank said.
Assets, but I'm not in that camp that it's sustainable because unless weaker dollar and higher yields suddenly makes the best companies in the world outside the U.S., the best and the most important companies in the world are American companies. They produce the best shareholder returns. And, if you look at the S&P, 40% of the returns of the S&P come from new companies every 10 years. Is there going to be suddenly the best new company coming out of Europe instead of the U.S. because of the dollar? And I doubt it. And I think U.S. companies are going to adapt.
All right. What do you think about that? Overall, I feel like we're in a fairly good place. I agree with what the host said there, that you can't have the same thing happening over and over and over and have it keep on pounding down the market because eventually the market doesn't react quite as much anymore. So eventually, if we keep on hearing about tariffs for the next 3 months, it's not like it's going to freak out the market. You can already see we have not resolved a ton. Of course, Trump has pulled back tariffs on a lot of other countries and focused more on China, but we're up from the bottom a significant amount. I think we'll continue. I think it will continue to get better over time, but of course, short term can be volatile. Let me know your thoughts underneath the video. Again, if you want to trade, there are links underneath the video. We've been able to make really good returns on this dip, and it's not like we timed anything perfectly. Like I was significantly in the red for a while on these positions, but we don't get too greedy. We open 3x long positions, and you can see up 16%, up 112%, up 46%, up 69%. When we see so much pain in the market, we go low leverage long positions, open them up, ride them up. Of course, we could always fall down. So make sure you know what you're doing. Thank you so much. I appreciate it. I'll see you in the next one. Bye.